Hello, and welcome to the 2025 Payments Canada Summit. You're joining us to talk about the real-time rail and success stories and lessons learned from global real-time payment pioneers, uh, hopefully giving us insights on how to unlock Canada's potential. I'd like to introduce my panel with me. I'll start with you, Anubhav.
Hello, David. I'm Anubhav. I lead the business development for NPCI International. And in this role, I engage with the external world outside of India to create bilateral rails for merchant payments and remittances. And we're also assisting other countries in building their own sovereign payment stacks. In my previous role with NPCI, I was the platform manager for the Unified Payments Interface. And just to give a quick snippet, the ACI Worldwide gave a report that UPI in 2024 managed about 49% of the world's real-time payment systems. So happy to be here on the call, and thank you for having me.
Great. Thank you for joining us. Elena.
Hello, everyone. My name is Elena Casal. I'm our Chief Client Officer at the Clearinghouse, where we run the RTP network, as well as ACH payments, so our EPN network, our high-value chips products, so all of our wires, as well as check image. So I have the responsibility to work with all of our clients, our financial institutions and their ecosystem partners, as well as any new financial institution into connecting and leveraging all of the rails we have at the Clearinghouse. So happy to be here.
Great. Thank you very much. And Caroline.
So I'm Caroline. I'm the co-founder and COO of JJ for Tech. So we are a technology service provider in the United States. We are based in Miami and we service small and medium-sized financial institutions. We provide a liquidity management platform, QR codes to initiate payments, and we also enable FedNow as software as a service. We are a spin-off of a company in Brazil called JD. So JD is the market leader to provide technology for Pix in Brazil. So JD has 54% of the direct participants to Pix. It processes more than 1 billion transactions a month. So we have had quite big experience with instant payments. JD has been around for 23 years now, so I'm more than happy to be here and talk about this exciting topic today.
Fantastic. Thank you all very much for joining me. We'll jump right in. As we've discussed, real-time payments have been implemented in many countries around the world, obvious from this panel. Some would argue that they are actually transforming economies, but each country's taken a different approach. They've all had to do it a little differently, which we expect as payments professionals. Ideas cross borders and travel, but there's always variations and personalizations or customizations for those areas. So let's start by describing what your country's implemented in terms of real-time payment network and real-time payment services and the impact it's had on those countries. So I'll start with Elena. Describe your real-time payment network.
Yeah, sure. So our real-time payment network is called the RTP network. So quite simple. It was launched in November of 2017, so a little over 7 years ago. It's been a journey before then in the United States as well as after. So one thing in the United States, most are aware, is we had a faster payments task force that was formed over 200 different representatives from large financial institutions, small community banks, credit unions, processors, end user groups, government groups, network operators such as ourselves, all coming together to agree collectively on what are the criteria for a real-time payment network. And as we did that over a few years, the Clearinghouse was determined that we were the right network operator to build it at the time. And so we launched it with a few financial institutions to start, and it's been growing ever since. I think the biggest, when I described kind of how it was formed and then how we're continuing to grow the network and see what it does today, it to me represents really how the US economy works. It's a market-driven economy where people come together to solve market problems. And those market participants are really what's driving what is leveraging on the network today, what kind of volume are we seeing, who are the participants involved. and also the growth rate as such. So it's been a journey. Some days are, a little bit more challenging than the others. We wanted it to grow faster, as you guys, everyone can imagine. But we also learn an incredible amount along the way, which I can share, throughout this hour. Today we're processing, over a million transactions a day, but we're seeing really impactful changes in client behavior, customer behavior, and our reach is over 3/4 of the country's, account deposit base, right? So if you think about it that way, we've done the reach, and now we're working on really changing customer behavior, being corporate behavior or and consumer behavior, in order to appreciate the value of a real-time payment experience.
Fantastic. Thank you. Annabelle, let me throw it to you and ask you how you would describe your real-time payment network.
Sure. Thanks, David. And let me just go back in time. November 2010 is when we launched our first real-time payment rails. It was called Immediate Payment Service, and it was just a credit push payment platform. And there was a latent need in the market to look at aliases and provide more security and flexibility. But the most fundamental premise on which we launched our real-time payment system was that we needed a completely open architecture. And that is what UPI came to be known as in terms of the framework and the architecture. So today, if you look at UPI as a platform, it does two things which are very, very important. One, that the entire technology stack that has been created is using the community-owned components on the tech. So it gives a lot of flexibility in terms of customization, in terms of scalability, both horizontal and vertical. And in terms of the platform functionality, what we have done is we did realize that as a network that we need to be more inward-looking. And our simple correlation was to the fact that if you need to create railroads and highways, you wouldn't create one highway for driving an Audi and the other one for Mercedes, right? You need to essentially create a highway which is pitfall free, and you let the consumer decide which of these cars they would want to drive. And to that extent, when we created UPI, we created it as an intelligent API layer. We did not define what initiation channels could be used, right? So today you could use your mobile banking app. You could have, as a bank, your own UPI app. You could use a third-party app like a Google Pay or even WhatsApp. So you can initiate transactions using the open APIs over WhatsApp chat as well. And you have maybe SMS coming in or ATMs coming in. So the idea was to ensure that any new channel that comes in can get seamlessly integrated into these API rails. And in the lower segment, if you look at the source of funds, we've kept it completely open. So today the regulator allows for me to attach my savings account, checking account, wallets, my credit card, and the overdraft account to for the same application. And this is where the consumer becomes a king in terms of deciding which of the apps he uses and which of the underlying source of funds he wants to access the money from, be it a liability account or an asset account. So that gives complete flexibility to the consumer. And what it did in 2017 September was that this open architecture opened up the rails for the open banking ethos, and Google Pay became the first application to provide the consumer interface on UPI. And I could attach any of my bank accounts to Google Pay, and I could transact for the person-to-person payments and the merchant payments. Essentially, what we've evolved with on this platform is to bring about a very strong level playing field between the banks and the fintechs and big techs. And that is where we are seeing the kind of volumes that are coming in to the extent of about 18.3 to 18.4 billion financial transactions a month. And if you look at the overall transactions, they are far in excess of 30 billion. So we are already doing 1 billion transactions a month. So that's how we've evolved. And I would say flexibility and the open architecture the same have been the bedrock for the kind of growth that we've had.
Oh, thank you very much. That's fantastic. Obviously, we've all been aware of the volumes. It's very impressive that way. Caroline, let's go to you. You're probably the most, coming from Brazil, you're looking at the most recent big name entrant that caught a lot of headlines. Tell us about Pix and what happened in Brazil.
Perfect. That's really the disclaimer I was going to do, David, because even though I mentioned that JJ for Tech only supplies the United States and I am directly involved with the U.S. Faster Payments Council, and I mentioned FedNow. Today, I'll be talking about PIX. So, PIX is the Brazilian national instant payment service. It was developed and it's maintained by the Brazilian Central Bank. So, definitely what impressed most about PIX was the numbers, as you just mentioned about UPI, right? So, Pix ended up becoming the fastest growing instant payment service in the world. And it's the second largest, only after India's UPI. It was launched in November 2020. And it really it has moved in 2024 the impressive number of 26 trillion Brazilian reais. So that is about $4.3 trillion. So it's about 63 billion money transfers. And in what I think that the most impressive about Pix is that if we consider that in January 2020 it wasn't even launched yet, so you had 0% of the Brazilian population using it. By the end of 2024, you actually had approximately 76.4% of Brazilian population using Pix as a mean of payment. And so it's a really impressive growth. And it is now the mean of payment most actively used in Brazil. So it surpassed all the other means of payment combined. So credit, debit, wires. I'm not even gonna name checks because checks were far dead like before Pix existed. I know this is an important disclaimer because if we look at the US, right, in 2023, like 54% of the US population still issued one check. So even though like for Brazil, like checks are unimaginable nowadays, it is important to make this disclaimer. But basically like in numbers, in Brazil has a population of about like 212 million people in 2024, which means that about like 162 million of Brazilians use Pix. So Pix really became quite popular, and I think that's the most impressive thing when it comes to Pix. And we're gonna dive a little bit more like later on, right, on how it works. But as like a brief overview of what it is, I think this already summarizes it.
Perfect. And actually, you've set me up perfectly. I will pivot now and go to a different set of questions. Okay, adoption doesn't happen automatically. It requires a lot of behavioral changes and shifts in the way of thinking and the way it's done. So in each of your countries, we've seen different adoption patterns across consumers and specifically across, I would say, businesses and probably financial institutions as well. So let's go into that. What were the aha moments that led consumers or businesses to really embrace real-time payments? And actually, let's start with you, Caroline. Why did Brazil take off so quickly?
So that's actually a great question, and there are many nuances to it, right? Because I think a really important point that everyone highlights about PIX is the fact that it was mandated. So yes, the Brazilian Central Bank mandated the implementation of PIX by financial institutions. But what I always like highlighting is even though its implementation by FIs was mandated, the usage wasn't mandated, right? So people started using it. And why? How did it happen, right? I have to say that to start off, like uh the first related to the first point, right, of the mandate, I'd say that the aha moment was basically when the Brazilian central bank stopped postponing the implementation. So it was first Pix was first planned to be launched in July 2020, and then the FIs requested a postponement of its implementation, and that's why it ended up being launched in November 2020. But there was a great reason for that, though. The reason why is FIs were implementing many other changes that also the Brazilian Central Bank brought up to be implemented. So that was the positive credit registry. There were also trade repositories, which I also built one trade repository in Brazil. It was called tag, and it was inside of a group that ended up NASDAQ listed called Stone. And it became mandatory, the registration of card receivables. So that implementation was also done in parallel. Also, open banking was being implemented. There were new cybersecurity requirements and also additional capital requirements. And prior to the implementation of PIGS, which was a really important prerequisite, it was necessary, it was necessary the implementation of the instant payment settlement system, which was called SPI, and also the national directory, so DICT. So all that was happening in parallel. So FIs were needed to breathe a little bit so they would be able to manage all these implementations in parallel. So after this initial postponement, that's when things started to kick off. But sorry, but then I'd say that people's usage really happened right off the bat, the moment that it was launched, because instantly financial institutions started investing a lot in marketing campaigns to in order to encourage people to use PICs. And the reason why was that financial institutions wanted to guarantee retention. So what FIs were worried were that people would register their PIX key, right? Because PIX transactions are not done like passing account number, routing number. You actually use an alias to do that transaction, similar to like how Venmo, for example, works in the United States. So banks were worried that these keys were registered with them so that their clients would not run away. So that really helped with the implementation. So I'd say, like, as a summary, there are two things, right? Mandate plus the big encouragement through the banks.
Okay, great. Thank you. So Elena, let's throw to you on this. Obviously there was the ramp up of bank participation, but how did you see consumers and businesses getting on board? What was that adoption and shift in their views or behavioral changes? How did that come about or help you?
Yeah, and maybe a little bit of what Caroline said. Also, remember, like in PICS, like 2020 was an interesting year for the global economy, right? So there was a lot happening, and we think actually that encouraged change in behavior in a very meaningful way, right? People were forced to think about transacting differently because they were at home. And so to me, a little bit of, again, market dynamics, excuse me, taking to effect. And so for the US, you know, the first couple of years were very much build the pipes, build the network, build the two-sided network, because in any network you need both the senders and receivers. And then when we had the global pandemic and people were forced to change their behaviors, you saw a little creativity, I'm going to say, right? A little force of that change for both consumers and businesses, retailers, what you did on e-commerce sites, what, digital wallets meant. And so all of that began, how people got paid, all of that began to change. And because they were thinking new and different, they thought, how can we leverage the RTP network? And so we started to see significant changes in workers, general contractors, employees, things like that, total shift. And so for a period of time, that segment, that was like the 20% of our volume, ended up being like basically B2C, how people got paid and earned wages, and like they pulled it more often. So I think for us, it was definitely kind of a forced market change, right? So it wasn't a mandate, but that, all being at home and having to still run your business and, manage your cash really helped that. Another example I'll give is on the merchant processing side. So when businesses, transact and they sell their goods and services, and they need to settle their card activity, that typically is over ACH, and that's typically over a few days. And so those providers were able to think and leverage the RTP network differently and use it such that those small businesses could get their settlements, right, on the weekends if they needed it, on Friday evenings at the end of the close of the day, or more often in the middle of the day. So that again is an example where businesses need cash in order to manage their own cash liquidity and their own books. And so the RTP network was able to kind of think creatively on that, to be able to find a market opportunity and revenue opportunity as well.
Yeah, great. Anubhav, let me ask you a slightly different question. So you talked earlier about having lots of merchants on board. So how did you get businesses on board? How do you convince them to switch? And I'll say it this way, switch from traditional payment methods, although they didn't go away, obviously. But what was the shift in UPI that saw this explosion in the acceptance of the UPI services that were developed? How did you get businesses and merchants on board to use this rail that you'd built?
So thanks, David. That's a great question. And today, before I give you the details, you would be pleased to note that we have about 640 million static QR points in the country, more than 50 to 60 million merchants who use them. And that growth came about in the initial stages, very, very specific to the way UPI was architected. It was architected as an open architecture, like I mentioned. So merchant may integrate UPI into their application for an in-app payment or a web-based payment, or you could do a dynamic QR, or you could do a static QR, or you could do an integration to the ERP systems. For once, what changed was that the merchant had the prerogative of deciding how would he prefer to integrate with the real-time payment system than just the banks deciding on the pedagogy of how they integrate with the merchant. So that's something which gave it a significant fillip. The other aspect, which initially there were some comments that when UPI came about, it ate into the existing payments pie, but it was not so because the overall payments pie was enhanced. And if you look at India, it's a complex country. It has over 625,000 villages. The smaller merchants, the grocery store owners were never integrated into the real-time payment rails. And having said that, what also happened was significant is the joint outreach that was eventually made by the banks and the fintechs, right? So like in cards, you have a BIN sponsorship where a bank sponsors a BIN and the fintech goes about doing the onboarding. Here, the bank would lend its handle to a fintech, and those corridors in the remote parts of the country where a bank may not be able to go deep into is where the fintechs went on their behalf and started creating the merchant infrastructure. And that infrastructure was as simplistic as a QR sticker that would be placed. So that being the case, today, if I give you a classic example, if I go to a remote part of the country and try buying, let's say, sugar, and if I were to pay cash, the small grocery store owner who has a QR stuck there is going to name and shame me and is going to tell me, why am I not using a digital payment system? Because it's very simple. So he will now make me ensure that I download an application, create my profile, and make a payment right then and there. Because one, the merchant realizes as holding cash at the counter is risk and a cost, and therefore is pushing me to download an app, make digital payments. And this brought about a significant growth because for once, the issuing and the acquiring infrastructure in the remote part of the country could mushroom and evolve without a dependency on a brick and mortar structure. Now, that having been said, the actual number of merchants have grown significantly, and that is providing a significant impetus to the way the merchants today receive money. And 80% of these payments in the country are today on UPI in terms of the digitalization. That's part one. Part two, which is very, very important, is that in a traditional banking model, it's a three-party model where the bank would open the merchant's account in their books and settle the proceeds on a T+1, T+2 as the case would be, and the merchant only gets to enjoy the liquidity on a T+2 basis. Today, if there is a merchant which is acquired by, let's say, Citibank, for want of another example, there is a possibility for the merchant to nominate the credits to go real time into the HSBC account. So while the acquirer is Citibank, the merchant gets money for the payment real time into his HSBC account, and that is immediate liquidity. So those are certain very key aspects that allowed the merchants to get integrated into the real-time payment systems in the manner that they so preferred. And because UPI was an open architecture, the banks are also willing to go the extra mile and accommodate the merchants to get them integrated into what suits them best rather than what the bank had, and then get the merchant on board onto what the limited capabilities in the erstwhile era. So I think that is something which brought about the growth. And today, I believe of the 18.3 billion transactions, we are doing in excess of 10 billion merchant payment transactions. And these are sticky transactions which are growing by the month. And that by any yardstick is big, because if you look at our country with 1.04 billion cards in circulation, about only 120 million credit cards with about 35 million individuals. So 2 to 3 credit cards per person. And all of the cards in India together do about in the range of half a billion merchant payments, and UPI alone does more than 10 billion merchant payment transactions. So it gives you an indication on how the merchants have liked the open framework and the convenience that it brings. Not even mentioning the demand side in terms of the consumers get to make these payments. So I think that's one of the big reasons for the growth that we have seen on the merchant side.
Okay, great, fantastic. Now, you've all said something that's triggered with me as I'm listening to it. Obviously, the rail itself, if we call it that, a real-time network is a rail or a utility for payments. It creates the ability to send payments, and usually, obviously, with an RTR or real-time, it's push payments. But you've all described something that I'll use the phrase overlays, or no, an overlay service that drives the value. And in many countries, the real-time networks have opened with 1 or 2 services, usually by an incumbent bank. And you've waited for other overlays to be developed or introduced to the market. So it sounds like India, obviously, there was many other entrants creating their own services. Let me step back and ask a bit more about Pix and about TCH. What are we seeing in terms of these overlays? I mean, I think in my mind, they're the entry point for people to use the rail. A lot of the times it's just embedded inside mobile banking apps. But how would, go to Caroline and then Elena, how do you see overlays appearing? What role are they playing? What value are they driving? Caroline?
So I definitely have to say QR codes. So QR codes were a big thing, definitely for pigs, and it definitely was really important to increase the ease of use, the adoption, and the efficiency of payments for specific use cases, right, that they're used for. Because I think that every mean like of the initiation of payments, we always have better use cases than others, right? But with QR codes, it's also really important to say that QR codes for pigs, they were also a prereq already for the rail. So all banks had to implement it. That was already on the specs of pigs. But and it was also born standardized, right? So Pix was created with a QR code standard that is called BR code, and it derived from an EMVCO standard. So it's kind of like an EMVCO standard adapted. And the Brazilian Central Bank created this specific BR code. So and basically in 2020, like about like 35% of the consumers, they had already used the phone to make a QR code payment. So that back in 2020. And now QR codes are the most popular way to initiate a Pix transaction. So 41% of Pix transactions are initiated by QR codes. So approximately like 2 billion Pix transactions per month are initiated by scanning a QR code. So it going back to the other question, I think there was a lot of behavior change, even though we were, as Lena mentioned, we were going through the pandemic. So all of those new trends of also using QR codes for other things, like for example, for menus, right, at restaurants, were starting to rise. So that definitely helped people to be more comfortable with using this technology that wasn't that popular at the time. And then with its usage, it became huge for many different use cases, as I mentioned. So bill pay, food and services, buying for merchandise, right? E-commerce was a huge use case that drove adoption, and also government payments. So, as I mentioned before, Pix payments could be done through Pix keys. So there are four types of Pix keys that could be established. So you could use your CPF or CMPJ. CPF is basically the social security number, or EIN, right, in US terms. For the CMPJ, right? So the CMPJ is the EIN, and CPF is the social security number. So that could be used as a key, or email or phone number or a random key. So those were ways that you could transfer money. But besides that, if you didn't want to like pass your key, a really easy way would be just like opening your bank app and just scanning a QR code through the mobile banking app. So of course, and Pix also enabled the generation of dynamic or static QR codes, but all the scanning was done through the mobile banking apps, which increased security. So I'd say that I
Yeah.
have to highlight, especially because I'm the vice chair of the QR code, of the US Faster Payments QR code work group. So I'm really engaged in that subject. I really think it was a really important overlay.
Yeah. So if the QR codes are the trigger for account-to-account payments, again, between banks, what are the fintechs developing? I mean, are they developing? They're still developing Pix services, though, right? And do they? And it sounds to me like you don't need to brand your own service like a Venmo or something else. As a fintech, I'm building a Pix service, whereas we haven't seen in a lot of other countries it phrased as I'm developing for the rail. They develop their own branded thing that uses the rail quietly in the background. So, am I correct in that it's fintechs are developing Pix services?
So it's really interesting that you bring that up because again, like in Brazil, I think that one of the reasons also that Pix prevailed so much, it was again talking about use cases, is when Pix started, there wasn't really a predominant uh P2P solution. So talking about P2P, there was this fintech called PicPay, which was actually the central bank's inspiration to start Pix. So it all started with P2P, and PicPay at first was the only player that provided that service. When Pix started, then Pix started growing through the bank's distribution. So I'd say that for like fintechs, it wasn't much of fintechs providing instant payment services because Pix would already do that, but it was basically other like you using Pix uh to enable services, let's say. So for example, like when Pix started was also the boom of the neobanks. So Nubank, for example, became the third largest bank in Brazil by a number of customers. And that was like a digital bank, right? When it started off, it was a fintech, and it grew a lot, also leveraging new technological implementations such as Pix. So definitely Nubank branded a lot, like encouraging the usage of Pix through their platform. But not only that, like the Pix was also used as an enablement, for example, to Mercado Livre, which is kind of like an Amazon, right, in Latin America. So it's an e-commerce platform that definitely also grew a lot by implementing Pix payments, right? So there was integrated Pix at checkout, like discounts for Pix payments. And also, another really important thing is in 2017, a law was passed basically authorizing merchants to differentiate prices depending on the mean of payment that was
Rail.
used. So it became really common for merchants to offer discounts if people paid through Pix instead of using credit or debit cards. So for example, Mercado Livre as an e-commerce platform definitely leveraged a lot that, or iFood. So it's kind of like a DoorDash, right? So an app to deliver food. They definitely started using Pix a lot. To get payments and also 99 Pay, which is basically a ride hailing app wallet. So I'd say that basically what fintechs, right, and startups did is they used Pix to help them grow, but it was more, instead of having lots of like different apps that would enable instant payments, what happened is the banks actually took advantage of that, considering that they implemented, which is also a big difference with the US's landscape, because in the US it's quite the opposite. You have lots of fintechs that pay by
Yeah.
bank, right, services, which did not happen in Brazil because Pix already helped banks do it for themselves beforehand.
Okay, great. So Elena, they've taken us down 2 or 3 different roads. I was asking about overlays, but you may want to start with that. Take me where you want to go with how's it worked?
Yeah, no, I mean, Carolyn's example in Brazil is so fascinating and so different from how we did it in the United States. And, I think about the audience listening and the Canadians and trying to figure out what they're going to be about to do, right? And so there's an opportunity to do it what's best for Canada. In the US, we were purposeful not to brand the RTP network to the end consumer or to the end business. That was very intentional. Because in the United States, we knew that the consumer brands and the corporate brands were really where the trust was. There was more meaningful connection. So I would, I say we always think about it that way, and that's why we are overlays. I was going to answer it more like a complete solution for a particular use case. So the wallets and moving money in and out of the wallets. You leverage the RTP network, but really the wallet, they decide if it's instant, if it's a couple of days from now, or if it's to a card, if you don't want it to your bank account. And it's pretty generic, right? And the consumer will pick based upon what price they want to pay and how fast they want to get it there. And that's all owned by, the wallet company, right? Doing what
More of an ecosystem to support all these other things.
That's right.
Yeah.
So they're leveraging the highway, right? In a different way. That's a little bit how the US works. The overlay will kind of determine that what is the problem they're trying to solve for the end businesses and what rail makes sense for them to use based upon, that model. So that's what I was going to tie in. And, Carolyn did say, QR codes are not picked up in the United States for a variety of reasons. Maybe there will be, and maybe with open banking coming in more in implementation over the next couple of years, you never know. We're in an interesting country with very diverse financial institutions, and so it's very large, right? Our implementation scale that we have to consider for all of, and so we tend to have pockets rather than one consistent methodology and standardization and rules around it, and mitigation of fraud and identity, and everything baked up all into it. So that's how I would kind of answer and tie the questions.
Oh, well, thank you. And I'm glad you brought up and tried to sort of look at North America and also what we're looking at here in Canada. We certainly have challenges, not so much in the launch of a real-time rail, the network itself. I mean, we have a couple of different services that very much look real-time to consumers. So we're adding the real-time settlement piece. And as it happens, I mean, Interac e-transfer being the P2P method of moving money, it is both the network and the overlay. So I'm expecting to see, like we've seen in Australia and the UK, overlays for very specific use cases coming in. I think a lot of them will be business facing. I highly doubt anyone's got the money to try and go head to head with Interac on a P2P basis. I mean, good luck, because it's everywhere. Everyone knows it. We've been doing it for 15 years. But I think on the business side, we'll see those overlays. So I think we're probably, closer to your example of overlays being developed by businesses for specific use cases. The consumers, they have what they have today. So I think you'll see that evolution. And like the UK and Australia, typically they had one overlay in place, maybe two, and then they grew over time. So we'll see what happens here in Canada. There was something you said that, of course, that's the next topic we all have to talk about. With every real-time network, there is always an influx of fraud specific to that network. So be it authorized push payments or other forms. But let me come back to you, Elena, and just say, tell us a bit about what you were expecting and what you've seen in terms of the fraud side of it, and then what you've done to combat it.
Yeah, sure. And let me know if there's audio issues. We, in general, any fraud statistics on our network are very low. So one, remember, we're credit push only. So there's no debit pulls where we have to do unauthorized, debits coming through. So the credit push is a very different experience. And we have extremely low rates from the beginning. So we don't have it there. What I will say is, to your point, fraud will always come to any new rail, any new app, any new online banking, any new experience. What we've put in place and learned from other countries is making sure that where the payment is initiated, there's multi-factor authentication and authorization. And that is part of our rules, even though, that happens outside of our network. We want to make sure between the parties that it is properly authenticated and authorized, and that the financial institutions have that in place prior to using the RTP network. So that's kind of an additional layer that we put in at the ecosystem level, knowing that those financial institutions have to abide by our rules, right? And so our rules are very prescriptive in that. We want to be careful, and we know that as a market utility, you cannot get it wrong. So we cannot get it wrong, right? We can't introduce a new payment network and get it wrong. And so we are always safe, secure, and cautious in whatever new feature we might pull out, bring to the table or launch. And so that's why we are cautious with kind of maybe some use cases that we leverage and offer today, what kind of payments, because we want to make sure the end businesses and consumers, as well as our financial institutions, know what what legislation's in place to support them, what liabilities are in place, what, governance needs to go around it, and anything new. And we don't just, whatever happens, right? So we are kind of a steward to our utility.
Yeah, very good. Yeah. Anubhav, let me ask you what you've seen in the realm of fraud with UPI. I'm aware of some very interesting changes and things you've implemented, but let's hear it from you. What did you see, and how did you address those fraud vectors?
So, David, again, I would go back to what Elena said. The fraudsters are glib talkers, right? Eventually, it's the greed which drives some of the other kind of frauds. But with tech-backed solutions, it's quite likely that all of these fraudsters who understand technology will be more innovative. So one of the big frauds that we had seen was the device takeover, because in case of UPI, there are two factors of authentication. First is device itself in terms of what you have, and then you have a PIN in terms of debiting your account. So the device is registered with its credentials for the payment service provider to know for sure that it is Anubhav Sharma who's doing this transaction for the subsequent financial transactions. So all I need to do on my device is enter the PIN and the transaction flows, with device credentials being carried as the first factor of what you have, and my PIN being the second factor. Now, this requires a silent SMS to be sent out to the shortcode of the payment service provider, where the device credentials will be hardbound. And this message was being passed on to some of the other fraudsters' shortcode, and they would get the details of the device, and then they would perpetrate some kind of the fraud. So we understood this to begin with, and we do believe that we're a network, and we may not have the complete prowess in terms of understanding the tech aspect. So we are an ecosystem participant, and we got the ecosystem together. Eventually, we did changes at 3 levels. One is at the device level itself. In terms of technology, we used the APIs provided by either the iOS or the Android to be able to call out either possibilities to prevent that fraud at the device level. And there were a lot of mandates which were issued by us as a network solution provider. Those changes were to be made by the payment service providers on their application servers. And the third level of checks are always at our central system, which we run. And today, if you look at it, what happens in case of a UPI transaction is that we pass a particular risk score in every API that goes back to the consumer's bank, and the consumer's bank can then decide whether they want to debit that account or not. This is the risk score. If the risk score is high, the bank may still want to decline the transactions. That's part two. Having said that, it's a liability account, and therefore the prerogatives must always be with the consumer's bank to decide whether or not to give that, because a false positive can actually to consumer dissonance. Having said that, the fraud and risk management engine that we run centrally is an engine which is backed by machine learning and artificial intelligence. And one of the aspects that you're looking at is to bring about a mandate for the ecosystem participants, aka the banks, to come up to us and disclose the modus operandi of the fraud. And if these details are fed back into the AI and ML engine, the attributes of these transactions are being consumed by the engine, and it evolves over a period of time in terms of the models. And we're very hopeful that at some point of time, the engine would evolve to be at a level where it can foretell and predict that a transaction passing through me, this is the attribute that it carries, is a possible fraud. And if the banks were to indemnify NPCI, we could eventually be able to drop the transaction centrally without exposing the banks to this kind of a trouble. And that, I believe, as a central system, a national asset, is more of a moral responsibility also that we carry, because we on UPI count about 750 banks, and not all banks may have their fraud and risk management engines to the extent that they would love it to be. And therefore, a network standing in can bring in incremental security. So I'm just giving a broad perspective.
Yeah.
And the other part, I think Elena mentioned, is we have curtailed to great extent the request to pay, because that could lead to some kind of the frauds which are significant in terms of the recurring nature. So we've been, really looking at how do we curtail that, and we've brought it down significantly.
Yeah.
Last but not the least, we've understood that the fraud comes about the aspect of the greed, right? Like I mentioned, and therefore awareness is quintessential to bringing down the frauds on a continuous basis. So we co-invest, we invest with the banks and the fintech participants to do a lot of work around creating awareness, because whatever technology changes you may do, eventually if the customer compromises his or her credentials, then the fraud could be on any channel, right? Then it may not be restricted to UPI, it could be on another digital channel as well. So that's something which we're doing on a continuous basis. And that, I believe, is going to be the most significant aspect for a country like India with 1.4 billion population, on how quickly can we reach the message out in terms of containing these frauds. So that's how we are looking at it in a broader perspective.
Okay. And you have very much a federated data sharing model between the banks and the center. I guess the one I'll ask you specifically about is, did you see a big lift in authorized push payments, where it's an authorized payment, but it's surreptitiously been driven to the wrong bank account, right? I've tricked you into sending it here. Did you see a lot of that?
So there are two possibilities here, David. One is the QR payments. So we've done away with the QR payments on a P2P basis. All of these QR payments come with an alias, which is the merchant's alias, and must be authorized by the acquiring bank. So on the merchant payment side, we've done away with that completely. The other is the alias that I would send maybe to David at Citi, right? That alias could be the only alias that I know in terms of sending money to you without knowing your account or your routing ID or an IBAN equivalent. So what happens there is that when I'm sending money to, let's look at an example, right? You chose to keep your alias as Michael Jackson at Citi, because you kind of like Michael Jackson, and that's an alias which is completely possible in UPI. So when I'm sending money to Michael Jackson at Citi, there is an API which is fired, and it pulls back your KYC name in the bank, and it displays to me that you're sending it to David, right? And I'm sure that
Okay.
it is being sent to David, and with that being available to me as a premise for surety, I then enter my PIN to make this payment. Having said that, what we also manage the banks is to do that when I'm sending this money, in spite of me knowing it is David, there is one incremental screen that pops up and says, you are sending money to David Hooper. This is going to debit your account. Are you sure you want to make a payment? And then I go about and cross-check the details once again before I come to the payment. By that, we've been able to bring down these wrong transfers to a great extent. But we are not just a technology provider, we're a comprehensive scheme. So there are rules available basis which I can get that money transferred back into the sender's account,
So,
even if it were to have been erroneously sent to some other account.
so that verification of the payee of where it's going has helped for that.
Real time. Yeah.
That's
Yeah.
great. So Caroline, let me shift over to you and we'll twist the question a little bit. Obviously, there's that balance you have to find between, putting all the security features in place, but putting too much friction in that it takes away the adoption or the usage. So how do you find that balance between the right levels of security, but the right level of friction so that it doesn't frustrate people to stay with the old methods?
I think that's the $1,000,000 question, right? I think that's what
We're all
every
waiting for your
airlines.
answer.
I'm sorry, I'm not going to be able to give you a precise answer to that one, but so it's funny because I've been like to many payment conferences lately, right? And definitely like all of them in the US, but I've heard so many like faster payments, faster fraud. I've heard that phrase so many times. And I'm not going to say I agree with the phrase 100%. Maybe faster, yeah, but that doesn't mean more, right? What I would say is you need, like, as Elena mentioned, you're always going to have fraud, right? It doesn't matter. Like if you have payments involved, if you have people involved, you're always going to have fraud. So we have many technologies out there. Many were mentioned here, right? Like multi-factor authentication. You have biometrics. You have many ways for you to avoid fraud. And I hear like during as I mentioned, right, like during those conferences, lots of worries about instant payments. And according to like the former president of the Brazilian Central Bank, actually when you look at the stats of frauds involving pigs, and you look, there is like 7 fraud occurrences every 100,000 operations. Uh, and while in credit cards, it's about 30 frauds for the same number of operations. So, definitely in Brazil, many anti-fraud measures were implemented. Lots of them on like the layer of the rails and others on the rail of the banks. But I'd say that with the technology out there, right, we have nowadays, you can offer a good experience to the customer without having them stopping to use it. And the Pix is a great example of that, right? So even though you still have to authenticate yourself and go through, and when you do a Pix transaction, the QR code, for example, has a signature, right? It has a token, it's tokenized. So it goes through a process doing that. People still use it. So you always have to invest in security. That needs always to be a priority. But yeah, so I think there's no perfect formula to it, right?
Okay, I'll come back to you on the next one. So Elena, let's get some closing thoughts here, or final thoughts. If you could give one piece of advice to Canada as we get ready to launch the RTR, what would it be?
Yeah, and I'll tie it into actually Carolyn's difficult question that she had to answer. So be ready to change. What we've learned more than anything is people create opportunities to use the network that's beneficial to the market. And you are never going to build everything correct on day one. And so when I mean be ready to change, I mean, make sure your ecosystem, so if you're a financial institution, make sure your vendors and your partners are able to change and flex with you. Make sure that, thinking about the friction, the balance between friction of fraud, be ready to change that experience because you need that friction, but you need to balance it and tweak it. So you're going to need to learn over time in those experiences, which is going to trigger change in technology, change in experience, change in product offering, change in, is it an API? Is it a file? Is it online? So be ready to change. It's all okay. and that it will continue to evolve for the betterment of your customers, right? So for the businesses using it and for the consumers. So that's what I would.
Great answer. Thank you. Anubhav, let me go to you. I've got two questions. You can choose which one you'd like to answer. First one is, looking back, is there anything you would change about your market launch? Or you can take, question number two behind the next door. What's the next big innovation in real-time payments globally? What's your choice?
So, these are both interesting questions. I would love to answer them both. But to my mind, essentially, we look at what's coming up next, and which is big, is the artificial intelligence that we're looking at. And I'll give you a quick, perspective around it. We do use it, and we use it to something which is very relevant for the last mile consumers. For a country like India, where we mentioned that there are 600,000 villages, and 65% of the people still live in villages. If you're using a feature phone, right, can you actually say to the phone, send $100 to David Hooper, and then it carries out that command? It's possible because we're doing it through UPI 123 Pay, where we're using the server level AI to understand the context of the speech to the voice command, and eventually these APIs are being invoked at the backend. So over a period of time, when AI becomes really predominant in the payment space, what's going to happen is that the interface that you're generating this payment from is actually going to become form factor redundant, because there are more and more innovations that will come about to say that I can send money with maybe mere gestures. I understand in China, you could just use your palm, and you are identified in terms of making the payment. My sense is, with the way the world is evolving, the DeepSeek AI becoming the dominant one in terms of lower cost, there are going to be more and more innovations, and we are seeing that already in the Southeast Asia. They're becoming big. My sense is going to explode in a much, much bigger way. And to be very honest, I do not even know how that's going to look like. But since you asked me, I mentioned that the integration of AI into the payment ecosystem is going to be big, and it's going to be used even in fraud that's more predictive, rather than being reactive the way we are today on fraud. You would be able to predict frauds, prevent them, and there's a lot of service that we're able to do to the last mile consumers in terms of saving their hard-earned money. I think that's going to be big.
Thank you very much. I think you're right. And as you mentioned, you've already started using AI and ML more and more. Starting with fraud, but I think you're right. I think it'll expand into other areas. So with that, Caroline, any words of advice for us, or by anecdote, things you might change about the launch of Pix? But I'll let you choose the path you want to answer.
Okay, so definitely one thing I would change for Pix was just don't use PII as an alias. That is good. Don't use your social security number or your phone number. Definitely don't want fraudsters and scammers to be like calling you. So I'd say that's something I would change about Pix. But on as a recommendation to Canada, I think there are many things that Pix has done that can be a great inspiration. And one of the things is definitely phase implementations, right? So we were talking about fraud here. To make basically to bring a frictionless experience is not putting it all at the start, right? Like, so starting to implement new features along the way. And I think that is a big lesson learned that the Brazilian Central Bank did a great job at doing it. It wasn't at all implemented at first, and also lots of lessons were learned a lot along the way. And there was a lot of pivoting in the sense of changing the anti-fraud measures that were out there as you identified behaviors that weren't really expected. So that's what I would recommend. Follow this path of phase implementations.
Great. Well, thank you very much. And with that, I think we're at time. So I'd like to thank you all for joining me. I think there's some wonderful things that people will listen to and review this session, and there'll be some key takeaways for them, things to think about, things to look at in the future, what have you. So I very much appreciate all of you for participating. And with that, we'll say goodbye and thank you very much.